market. Can you hear me?
Yeah,
Hello?
you muted yourself, I think.
Okay. Good
You're
morning.
muted.
Good morning, everyone. Welcome to the market. This is our daily show from Monday to Friday, 7 a.m. Eastern Time, 12 p.m. BST, where we discuss every day the things to do with the modern market. That is the crypto market, the NFT market, and how to make some or a lot of money on the internet. Loaded up for discussion today. We have Story Protocol announcing $80 million Series B led by A16Z at a $2.25 billion valuation. McDonald's Instagram hacked with Grimace launched and 700K rugged. And NFT market surges, all kinds of things up across the board. We're going to dive into all of that and more. We've got the latest on price action on crypto and NFTs and some discussion on how creators can prevent a million problems down the road by focusing themselves on one particular core issue. Stay tuned for that. Today, Legendary and Sammy are in the co-host seats, and we are ready to get into it. But before we do that, just a reminder, friends, nothing that we say here is financial advice. This market is very risky and we do not know anything for sure. So please proceed with caution and exercise your own judgment. With that out of the way, Legendary, how are you doing? How are you feeling?
GM, doing pretty well. 2 more days and it's off to London. This week has been going by incredibly fast. And I feel like so have the last couple of months. And if I think about it, it's almost September and the year's almost over. And that again is stressful, but also motivating.
Yeah, Q3 basically didn't exist. Q3 is like NFTs between 10 ETH and 20 ETH. They don't exist. You either are in Q2 and then you just skip through to Q4. The summer has kind of gone by very, very quickly. Sammy, how are you doing? What do you think of Q3? You managed to do anything in Q3?
Well, made the most of the sun that we could do in the UK before it's now wet and windy again, but not as bad as Austria. I think we saw some pretty heavy flash floods over there, which is why I think you're looking forward to coming to the UK. But yeah, that was just on the rest of the year. I saw something around AI that was posted in 2016, and it said by 2025, women would be having sex more frequently with robots than they would with humans. And I was like, well, that's only like what, 3 months away now for that.
That's only 2 quarters away.
Huh?
Did you say by 2025? It's like in 3 months.
Exactly. Yeah. Which, yeah. So I don't know if that's going to play true, but that was going pretty viral on X yesterday that I saw.
Interesting. I think we've missed quite a lot of futuristic predictions, to be honest. I think there were people thought we'd be flying around in cars by this point in time. So like on the one hand, we've made loads and loads of developments and are probably, obviously more modern than ever before. And yet I feel like there's things like we still got a lot of room to run. We've got flying cars and robot sex, I guess.
It's supposed to be the end of the world, wasn't it, as well? A year ago or 2 years ago from the Myanmar calendar, which obviously never came to fruition. So yeah, these predictions, maybe now that we've got prediction markets, if we chuck them on there, we might get some more realistic predictions and timeframes.
Yeah, as you at Port says in the YouTube comments, no more predictions without a poly market bet. That's how we know. That's how we'll be able to gauge. Like, when will there be flying cars? Will it be soon? Will it be in the next few quarters? Will it be in the next decade or maybe in a few decades? The market would be much easier to determine if we had that bet open. Right, should we get into it? Let's get into it, starting with the price action and the headlines, as always, coming from the snapshot, which is pinned up top. We'll start with the price action itself. We have Bitcoin up a few percent, up 3% to 61K. ETH is up a couple of percent as well to 2.6K. And Solana is up just 1% to $143. In terms of the headlines themselves, we have just waiting for it to load. We've got Story Protocol announcing $80 million Series B led by A16Z at a $2.25 billion valuation. The details here is that without great original IP, the AI models don't develop. The co-founder and CEO S.Y. Lee said, emphasizing that AI is taking and stealing all your data without your consent and benefiting from it without sharing the rewards with the original creator. So we're going to dive into that more, trying to explain how they are trying to use the blockchain to prevent AI from taking everything that you create. Number 2, McDonald's Instagram hacked with Grimace launched and 700K rugged. Earlier on Wednesday, the McDonald's account on the social media platform appeared to promote a Solana-based meme coin called Grimace. The token rapidly rose to a market cap of around $20 million before drastically falling to below 1 million. So pretty big rug there from a very prominent account. And finally, NFT market surges. Penguins are up 7%, Mockaverse is up 15%, Mutant Apes are up 7%, Doodle's up 7%, Deagle's up 7%. We'll dive into a little bit more there, kind of explain some of the thinking of why we think this is happening on the NFT side of things, especially as meme coins, I think, are kind of cooling down a little bit. A few notable sales around the space. Tyler Hobbs Fidenza sold for 40 ETH, which is the one pictured. Remember, we're live streaming on X and live on YouTube too. And then there was a bunch of X copy sales, actually. I mentioned two of them there. X copy The State of Us selling for 30 ETH. X copy No Future selling for 22.89 ETH. And then later on in the snapshot, I report Raoul Paul buys 3 more X copy known origin editions for around 20 ETH each. So top end X copy market still very, very hot. That is the price action and the headlines coming from the snapshot. Legendary. Let's head over to our NFT marketplace partner, Mintify, and see what's going on the NFT side.
Yeah, absolutely. You have mentioned quite a few things already. Bored Apes have corrected down a bit, now sitting at a 12.7 ETH floor. As you said, Pudgies are up significantly. They have surpassed the 10 ETH floor by quite a bit. They're actually up to 10.4 ETH. That's a gain of 8% over the last 7 days even. Milady is up just a tiny bit to a 4.02 ETH floor, plus 0.75%. Azuki's are up a touch, 4.64 ETH floor. So as you have noted, actually quite a green day when it comes to NFTs. But I think the main winner definitely tied to the main headline today is Story Protocol. It is their On-Chain Chronicles NFT collection that is up 194% over the last 24 hours and up 246% over the last 7 days, sitting at a 0.0589 ETH floor.
Well, that's not bad. That's not bad at all. Probably could have been foreseen because I feel like we've spoken about them before, but I can't remember in what context. I mean, this is a Series B, so I wonder whether we had them as a headline when they did a Series A, potentially. But we're going to dive into them a little bit more because there's a bit of beef on the timeline. It's very important to discuss as well because the L2 landscape is getting pretty hot and the competition is really, really heating up. So we're going to dive into all of that a bit more. Before we move on to in that direction though, Sammy, what are you seeing on the NFT market side?
I think ETH has been pretty well covered, but if you go to the Blast side, there's a couple of things happening. If you look at the number of transactions, that's spiked quite significantly over the past week or so. And also, if you look at the NFTs specifically, you've got Wolf Game, which had a few sales coming through. I think Gangsters Arena actually went live this morning. So season 4. So I think 230K Blast Gold's up for grabs. So a bunch of the NFTs, so the Gangsters were minted and staked in the past sort of like 8 hours. So yeah, there's a bit of activity on Blast that people aren't necessarily talking about. And I think that I wouldn't completely write it off. And I think we've spoken about this before, where just keeping an eye there and just keeping your activity going with low cost, it can't harm if you've got the bandwidth.
Yeah, I think that's fair enough. The one thing that I think seems to have legit continued attention, and maybe there's some other things too, but I do think that Fantasy Top seems to be a game which people are still actually trying to play. Like I've seen people actually tweet at heroes, and remember, heroes are the people who have themselves as a tradable card within the Fantasy Top game, and people are kind of tweeting at them like, look, make sure you tweet this week, or make sure like I've just played you as a card. And really, that's the kind of action, or that's the kind of reaction that you want and feedback from your users that you want to see, right? Like in the absence of continued kind of incentive programs, you want to see people actually wanting to participate for the love of participating.
Yeah, and I think it's a sustainable business model. You've got Tactics, which is a pretty decent, like low cost entry to it if you don't have as many cards. You've got they're earning fees. So I think they've earned 8K in fees just in the past 24 hours. So similarly, YOLO on Blast, like they've earned a significant amount more. I think they've, looking at DeFi Llama, they've got about 33K in the past 24 hours. So you've got these like actual like business models that seem to be working, whether it's gambling or not. But yeah, they're making revenue. And similarly, you can compare that to the likes of Base. And I think we'll get into that fee discussion with IP Story Protocol later on anyway.
Yeah, interesting stuff. Moving on from Blast then, Legendary, and moving on from NFTs even, what else is kind of catching your attention at the moment?
I think for me, it's still what I said yesterday. On the one hand, Telegram. On the other hand, the Tron ecosystem, with the difference being, or maybe the more differentiated take being that I don't think that meme coins on Tron are there to stay forever, and I'm actually more interested in exploring the rest of the ecosystem.
Okay.
And
Why is that? That's pretty important, right? Because I think a lot of people are getting attracted over purely for the meme coin action, but you're saying, wait, no, there's actually maybe something else to explore there. What exactly do you mean there, and what are you thinking?
Yeah, so why I don't think that the meme action is necessarily sustainable. I think that Easy had a very good post on that, kind of saying that we see more and more of a fragmentation of the market. Obviously, new ecosystems coming into play, or ecosystems that have been around, like Tron, suddenly being noticed by the public as something actually very, very huge. Then you still have the election season getting hotter and hotter. And in September, that's another point that Easy made in his post, and I'm going to share on screen. He was saying that people will be at conferences, so attention will be divided even more and more. And the things that require the most attention when trading are obviously meme coins, because they live and feed off that attention. So that's why I just don't think that outside of the, say, main meme coin hub of Solana, there's going to be that many great plays to be made. Certainly, there will be meme coins that make money. I'm not absolutely not saying this is not the case, but that's just not where I want to have my focus. I definitely want to play around a bit more with Just Lend, and to see how that protocol works. And then, based off our conversation that we had yesterday, and a completely separate point to that is the PayPal USD PYUSD and the rates that you can currently get in Camino. Definitely want to move some of my stables over the weekend out from Blast and put them into PYUSD and see how that's working out. Yesterday, I had mentioned that I wanted to look into their potential compliance with Mika for stablecoin regulations, and it looks like it's something that they try to achieve. So that made me a bit more confident to go for that play as well.
Okay. I like it. As I mentioned yesterday, or as you just mentioned, as I mentioned yesterday, this the stablecoin thing is very interesting to me, because when other people get risk on, it obviously becomes more lucrative. And this, people may not be familiar with this, although once you hear it, it kind of makes more sense. As other people get more risk on, it becomes more lucrative for you to lend to them, because the market wants USD in order to go and convert it and go and chase higher gains elsewhere. But the crucial distinction, which I pointed out yesterday, is that the PayPal stablecoin is not like the yield that you are earning. And remember, people always want to know, where's the yield coming from? If you don't know where the yield's coming from, then you are the yield. The yield is not coming from the lending volume or the lending fees, because the utilization is actually not that high. But it appears to be the case, and I couldn't confirm it yesterday because it's just like a couple of articles that I found on it, and I wouldn't necessarily even go and put my name on something when it's just a couple of articles. But it's suggesting that it's actually PayPal that is incentivizing this kind of additional use. So PayPal are kind of paying out this fee according to the couple of articles that I read. So, if 1% of your 17% is coming from the actual lending fees, and then 16% of it is coming direct from PayPal itself, while they're trying to grab a hold of the stablecoin market, which we all know is an incredibly profitable business, then I think that is what not only PayPal are going to might be doing, because they consider this to be such a profitable business to get a foothold in. But I think we could definitely see other stablecoin issuers have to give, or be willing to give, quite aggressive incentives in order to capture this incredibly lucrative business, which is you give us your money, we give you, we might have to give you a certain amount to bribe you at the beginning, but then after that, maybe we're not giving you anything. And then we just earn all of the fees when we kind of put your money into treasuries and earn like that, the tether model, and then we can buy Bitcoin with it. So that's still very high on my kind of exploration and wanting to see if that plays out more.
Yeah, absolutely. I agree with that. I mean, I remember that we looked at Tether and at the Q2 profits. What did they do? 5.2 billion in the first 2 quarters of the year. Also see Funky with his hand up on that. So quickly wanted to go to you, Funky. Welcome to the stage. What are your thoughts on the stablecoin discussion?
GM friends, just a couple quick notes. For one, I think that PayPal has tons of money, and full disclosure, I own PayPal stack, so pump my bags. But the more serious thing is Paxos is the only. I think this has not changed. Is the only stablecoin issuer that has gotten regulatory clearance from the state of New York, and New York in the U.S. is notorious for having the bit license and all this other stuff. It's very, very restrictive. And this is why I was so upset when BUSD died, because the SEC kind of went after Paxos. And yesterday, when we were talking about the PayPal stablecoin, I thought it was Circle they had the partnership. And when I looked it up, what's the PayPal website, and started digging, it's actually Paxos who's the issuer of this. So there's also that is, I think, a noteworthy point that this particular stablecoin is issued by Paxos, which is the only one that has gotten any sort of regulatory clarity in the US as a stable coin issuer. So that's something to keep in mind in just terms of the safety and security of this, using this stable. Not that I'm probably going to use it, but it's just something to keep in mind.
Interesting. Very, very helpful additional context, Funky. Appreciate that. Let's keep it moving then. We want to remember, we're going to get into all of the headlines in just a little bit. We've got the story protocol news, we've got the McDonald's hack, we've got the NFT market surging too. But we're going to get into our weekly entrepreneurial segment where we explain some of the key secrets and tips to making money online as a creator. Today, I'll focus on one of the most crucial decisions you can make on content to prevent a million problems further down the road, which is create what you know. This segment is brought to you by Lil Nouns, an expansion DAO based on the famous Nouns DAO, who fund cool creative endeavors which can proliferate the Nounish meme. So let's start with the story. When I first started as an English teacher at 22 years old in a challenging secondary school in London, there were all sorts of tactics taught to help us control behavior. They said we could line up the kids outside the class beforehand to make sure they entered in an orderly way. They said we could make sure the kids had some specific task to do as soon as they entered. They said the school policy was for the kids to track you as the speaker at all times when you were speaking. But the problem was that this was just not working. But my friend had the reason why. He was an excellent teacher, had no problems with engagement, and noticed why it was going wrong for everyone else. He said this: the problem with having all of these systems for engagement is that it exposes the teacher if they don't know what they are talking about. Systems for engagement are only good if the underlying subject knowledge actually exists. This was genius and empowering to me because it made me understand the power in having the proper subject knowledge and making sure I knew all of my content inside out. There's nothing worse than giving your attention to someone because you think they are an expert in their domain, and then getting disappointed because you feel they have overstated their knowledge or credentials. This leads to two specific reasons why you should always create what you know. Number one, you cannot trick your audience forever on a topic you don't know about. And number two, you will never get over your insecurity of speaking on a topic which you don't know about. Leaning into what you know best or what you are interested in most will always be received better by the audience, and it might just make your job and life a lot easier too. Legendary. That is my reflection today. What do you think in terms of its applicability to Web3 and creating online full-time in our space?
Yeah, I like the story a lot for, on the one hand, for the reason I used to be a management consultant. That was basically the gist of it. You just needed to be one day ahead in terms of knowledge, one day ahead of your clients to just be able to tell them a bit more and then educate yourself, and then go back the next day and tell them a bit more while you weren't an expert on the field and you were like LARPing around, which I didn't find to be very satisfying on over the long run. And on the other hand, because you mentioned the school system, Like I remember when I was in school, actually, I grew up speaking German, Romanian, and French, and French and Romanian being both Romance languages. And I had an argument with my geography teacher who told me that Romanian is a Slavic language. And I was like, yo, that's definitely not the case. It's my mother tongue, and I can assure you it's not the case. And I lost all the respect to that person. So that, goes to say exactly what you just had mentioned. And I think the same goes for Web3, and especially in Web3, a lot of the creators are very young. You have a lot of people who are super young, don't have professional experience, but are advisor to companies. And some of them are very genuine about that. And they're like, they are good in gaming. They understand communities. They have a very good feeling for the pulse of the market or how sentiment is moving. And others are LARPing as if they could give operational advice to a company while they have no professional experience at all. And I don't want to point names, but after a couple of months, founders start to figure out who these people are. And they, in calls with them, I'm like, yeah, I'm not going to work with this person anymore because, that LARPing can only get you so far. So like you definitely can make money LARPing around, but you will do way better in the long term if you actually speak to the things that you have a clue about, or educate yourself at least about that. And then comes the confidence with it, as you have perfectly mentioned.
I like it. I think all of that makes a lot of sense. Sam, I wanted to ask you, because as a kind of full-time creator yourself as well, like how did you decide to hone in on like what you thought you were best at in this space?
Well, I think it comes down to your interests. And ultimately, if I look back at when I worked at EY, you'd have subject matter experts that would choose a specialism after they got to a certain level. So you'd have partners that would be the go-to person for a particular industry or segment or whatever. And the other partners would go to them for that. And generally, it would be something that they're genuinely interested in because they'd attend conferences, they'd attend like these events out of their spare time just to make sure that they are clued up and they're the go-to person. And I think the same can be said for this industry. Like there's so many different categories of crypto, blockchain, Web3 that you can just hone in on, and then you can become a subject matter expert. And I think if you have a genuine interest, you're willing to go deeper than the next person. So I think like that's probably the biggest piece of advice that I would give. And I think for me personally, I mean, I like loyalty reward programs. I enjoy the prediction market stuff at the moment. And I think just having that sort of nuance, I think RWA as well is super interesting. And that ties into my traditional finance experience, kind of bringing securities and assets on chain. And I think like that kind of stuff, for me personally, is interesting, but you guys might not find that interesting and you might have your own specific niche. So I think work out what that is first, and then you can double down on that specifically, and you'll be able to produce content that's far more interesting than the average person.
A final point on this might actually be like again, I do this sometimes, like it's a related point, is part of this universe, but it's probably going to be part of a different segment another day. But just the way that you were speaking about that made me think like, just don't design a life or design content that you don't want to do over a long period of time. Because in the end, this is the thing when people chase engagement and they either don't know about it or they are not that super interested in it. Say that thing goes well. What's the best case scenario? You get loads of engagement and you get loads of attention, you get loads of followers, but then those people are going to want it again. Like if you set yourself up, if you get the engagement, you get the hit, you get the followers, you get the attention, but you don't actually want that attention because you don't want to do that with your life every single day or every week, you're in a really precarious position. So in the end, you've got to set yourself up to do things that you want to do on a routine basis, which means sometimes you might even sacrifice engagement by going for the things which are more core to you and which you know better and are interested more. So that's an interesting segment. Shout out to Lil Nouns for sponsoring the segment called Publish and Profit. Real focus on the creator economy. We're all figuring out how we can leverage the tech and our content to get bigger and grow as we move forward in the space. So shout out to Lil Nouns. Let's get into the headlines for today. We have 3 important ones. Let's start with Story Protocol. I think this was the big raise where Story Protocol raised $80 million Series B led by A16Z for an intellectual property chain. So I'm just going to set this up with a few bits of information on the nature of the chain and like why this chain exists. They said, without great original IP, the AI models don't develop. They are emphasizing that AI is stealing all your data without your consent and benefiting from it without sharing the rewards from the original creators. Story Protocol works by converting intellectual property into IP Legos, modular and programmable assets that can be licensed, managed, and monetized through smart contracts on a blockchain. Lee explained that Story allows creators to assert control over their data by embedding licensing and royalty terms directly into their intellectual property. With Story, creators can embed licensing terms directly into their IP, ensuring that anyone who uses it must adhere to their rules. You're declaring your sovereignty around the data. This is about saying, don't mess with my data. This is my IP. That's the headline. Ledry, I want to throw to you first to get some thoughts on it. I want to hear from Sammy as well. I know you've got some numbers on this. And then we may need to dig in further because sounds like a kind of big vision. What do you think?
Yeah, it's a beautiful vision. Looking at principle, I do agree with it. However, as I don't have the deck or I don't have the actual information in front of me, and it's not really to be found online, it is hard to tell how they want to make this work. Because if you think about that from an artistic perspective, you can obviously take and draw inspiration from other pieces of art and reinterpret, do a reinterpretation of them for your own work. I can be inspired by another book. If I read a book, I don't know, even there was a very famous lawsuit, I think it was in France, with an artist just drawing the world famous Louis Vuitton monogram on a canvas, and Louis Vuitton sued for copyright infringement, and the artist won because the artist made the point there was actually a piece to criticize the commercialism and the consumerism around Louis Vuitton, and thus they were allowed to use the logo in the artwork. So given how we have been treating IP rights, how we have been treating art in many societies and lawsuits around the world, I'm very curious how you want to make this work with AI, and how do you want to force different LLMs, whether, because right now we're seeing a lot of public facing LLMs like ChatGPT. How do you want to force them to adhere to that tokenized IP layer for licensing? So in principle, like, I love the vision, protect the IP, make the AI model pay you for the content that the AI is being trained with. But if you look at, I don't know how X is being trained with Grok, where you as an X user are consenting that the post you're creating, the content you're creating, is to be used by the LLM to be trained as well. I'm wondering how this can actually work out in practice and become a scalable and sustainable business model.
Yeah, I think it's a huge task, and I think the enforcement of IP, maybe in a previous era, although it might have been difficult, it would have certainly been easier than it is now. What do you? I mean, I just had this idea. I saw this tweet from Luke Weaver. He's a friend. He's in the visualized value ecosystem, kind of the ecosystem of Jack Butcher, and I'm pretty sure the way they think about this stuff, and I don't want to put words in all of their mouths necessarily, but this is a really interesting concept. This tweet that he put out yesterday, maybe in response to this kind of news, was IP is information slavery. Abolish IP. All information is created equal. And it's got this kind of meme for the people who are watching in on X or on YouTube. It says like, I made this. And then there's another person kind of tugging at an idea saying, you made this. And it's just like, it's just making fun of the idea that you can have an idea and then, you had the idea, but was that like 10 seconds before someone else, or you had it even 1 year ago and someone else has taken it in a slightly different direction, but maybe they never met you and don't have anything to do with it. So, I mean, I definitely appreciate that there's a lot of effort and important times when you should want to protect your IP. But I think there is definitely this movement in Web3 where it's just like, look, don't worry about it. Let people use it. It helps to proliferate it. Just let it go and let it fly. Sammy, what do you think with these kind of two kind of camps? One, got to protect your IP, make everyone pay you for it, versus the Web3 ethos, maybe, which is more like, let it fly, let people go, do it all, and let it proliferate.
Well, I think this is a really, so the first thing that springs to mind from this when I heard about it was, I don't know if you remember, was it back in March or April, the OpenAI CEO, or I can't remember who it was specifically, the name of the person, but she basically blundered on an interview when she was questioned around the source data of
Oh yeah, I
the
remember this.
information.
She wouldn't say. Was it that she did say, or that she wouldn't say that they trained it on YouTube? I think.
Yeah, so that was exactly it. And I think she was just being a bit vague, or she said something that kind of contradicted herself. And I think the idea around this protocol kind of looks to solve that. So in theory, yeah, it's great, but I agree with Legendary that in practice it's very different. Like the legal construct globally is just so diverse that to then enforce that, those IP litigation issues and all that kind of stuff, it'd just be very challenging to do that. So I like the model, but I think in practice, it's going to take a very long time to try and get that, especially globally harmonized, so that everyone kind of sings from the same hymn book, and you can actually enforce that. Because I think ultimately, if you ended up wanting to bypass the issues around it, you would just go to a jurisdiction that they find it hard to enforce it, and you would just use that anyway. So I just think that that's something that kind of springs to mind from that standpoint. And I think just looking at I don't know if we're going to touch on the L2 discussion around fees in a bit, but we can touch on that as well.
We'll do that after. Look, a lot of good points there. That's a good call out with the OpenAI stuff, because there does seem something almost insidious that then, okay, fine, you're taking everyone's data and you're training your stuff on it, but now you're going to centralize all of that learning and package it up in the ways that you want, and then charge people for it potentially. Although I know they have free options and stuff like that. But Legendary, I know you've got a hot take on this. Come in with it. What are you thinking here?
Yeah, on your question, protect IP or just set IP free to proliferate. I think this is actually one of the most stupid takes that is circulating in Web3. Because if you look at modern medicine, if you look at pharma, if you look at how cost intense that research is and how patents actually matter for that, if you are a company and you're researching new medicine and you're spending billions and billions of money to get to that point, you do want to have that IP protection for a couple of years until it becomes commonly available, because otherwise all of that research and all of that modern medicine would not be happening if that protection would not exist. And then, we would have free IP, but we would definitely be somewhere, I don't know, stuck 50 years ago when it comes to health tech.
Look, I definitely understand from the commercial perspective. In particular industries, I wonder whether there are certain industries where you can maybe be a little bit less freer. Maybe in health, for example, it might be ones that you have to lock it down more. Maybe in media, it could be a bit broader. The only thing I would say is that there was a point in time where I was helping a team with their licensing, and I didn't help them a great deal. It was like quite an informal arrangement. This is back in 2021, 2022, kind of during the bull market, if I remember correctly. And they kind of wanted to do the license, and they were very much torn, because the thing is, the law is very, very precise, right? The law wants to know exactly what you want to do. And you can basically, when it comes to licensing, you can do what you want. Do you want to give all the rights to the people? You can give it to them. Do you want to keep them all for yourself and be able to exercise your right over your IP? You can do that. You just need to tell the lawyer what you want them to write. But they kind of got themselves in this situation where they're like, well, we do want to give it to you, but we also want to make sure that you don't do this, 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 and this, and blah, 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 blah. And so, like, that's the ultimate reality, where when it comes to legal stuff, it's like, look, you can say either if you want, but on a legal basis, I would not advise anyone ever, and I'm not a lawyer anymore, but this would just be my personal advice, not legal advice. Don't give your rights to someone else to let them do what they want to do whenever, because it might be okay now when you know the people and you think that they're your friends at the moment, but this stuff changes. This stuff changes over time. You want to protect yourself legally, especially when there's a lot of money on the line, and you don't want to give people complete free reign on that. But look, that's from the IP perspective. Sam, I wanted to take this on the kind of the chain perspective, the L2 perspective for a little bit, because one of the interesting things that's come out of this is the kind of the beef that has been in kind of that's kind of started between Berachain, Monad, the Story Protocol. And this was the quote from the Story Protocol founder. He said, "Last month we announced our vision of building the world's IP blockchain. It triggered some people primarily," and he names the founder of Berachain and some from Monad. Said, "I didn't expect such controversy. I was making a pretty damn obvious point. The industry is over engaged in the same old infra masturbation." They started defending the groundbreaking proof of liquidity model and how they invented some incentive mechanism. Honestly, I couldn't care less about these projects with slight technical tweaks or novel incentive mechanisms that play crypto VC backed casinos. Best of luck in your mission for minor technical breakthroughs or a faster chain and discovery of a novel incentive mechanism for liquidity. We have a real, more urgent problem on our hands. It's the existential problem that is putting the entire internet culture at stake, the advent of an artificial intelligence. So, I mean, very, very strong words from a founder, and an interesting tweet from the BD at Athena Labs said something like, "Look, the time where these different L2s will be sitting on a panel, smiling, joking around, agreeing with each other is over. The gloves are off now because I think people have realized this L2 model is incredibly profitable, and there are so many coming to market now. Well, there's so many in the market, there's so many coming to market that you're going to have to fight to get the people onto your chain now. And I think that's what's going to happen. So, Sam, I know you've got some numbers on why this L2 stuff is so profitable, and maybe explains why this hostility is emerging.
Yeah, I mean, if you look at base alone, I think they're making. I wouldn't hazard a guess exactly whether it's specifically right, but you've got DeFi Llama, which is saying that they made sort of 50K in the last 24 hours in fees, and that's only likely to go up as these protocols kind of scale, more activities on there. I know that the EIP 4844 would have reduced that at the L2 level, but it's still extremely lucrative. Blast as well, they've got a gas fee rebate, so you're effectively taking the fees from transactions and repatriating that back down to protocols to kind of act as an incentive to build out and develop. And I think that value capture is happening pretty much at every single L2 level. So it's just interesting to see that value accrual come up. And with that, when money's on the line, I think you do see this competition and sometimes less friendly competition to try and get that distribution, to try and get users on their chain for their particular purpose. I like to think that some L2s are probably used for different purposes as well. Like you've got, I think this IP, the story protocol is going to be IP specific, sort of AI focused, but maybe abstract is going to be a bit, I know they use the phrase consumer crypto, but effectively getting the IP from Pudgy specifically on there, and maybe kind of building out the ecosystem, and maybe using sort of infrastructure as a service for other sort of IPs to then generate revenue. I don't know, but yeah, it's just interesting. I think each L2 is going to have its own individual model, and there will be some overlap, and you will have some controversy where they compete for that. So it'd be interesting to see how this develops over the next sort of 12, 24 months.
I like it. A bigger existential question, Legendary, I'll let you take this in either way, though, because I want to hear your take either way, is why does this need its own blockchain? Like, does this even necessarily need its own blockchain in order to be able to enforce this kind of stuff? Is this not part of the VC thing anyway? Like, it's hardly outside of the VC thing. They just raised a ton of money from A16Z. So what are your thoughts on that? And then your general take with this kind of battle, this L2 battle?
Yeah, it needs its own blockchain because it's just more profitable to build it on your own blockchain. It's the same thing with Pudgies. Do Pudgies need their own blockchain? You could make the argument that they did pretty well without that, but I also absolutely understand why they want to have their own blockchain in L2, because it's such a profitable business model. And if you manage to get enough distribution, attention, and users using your stuff, then why not integrate the blockchain tech to your product offering as well and just make more money on that and make that more attractive for VCs who come in to invest as well? On the more general battle, Sammy has pointed out that Smokey, the bearer, the co-founder of Berachain, had replied to that post saying, I mean, go off, king. If your primary means of evangelizing your own product is looking down upon others, then I can only hope that you mature in the future. I'm always happy to defend what we are building with proof of liquidity. Best of luck with story. I feel like it's been quite a long time that, L2s like coexisted peacefully, and it didn't seem very competitive at the founders level. Like I myself remember hosting spaces where we had Arbitrum and Optimism people in, and everyone was like super friendly. So I do get it if the competition is heating up. I don't necessarily agree with the points that Lee from Story has made, or how they have expressed them, because ultimately they are VC backed as well. So I don't get like the VC hate if you get a massive investment from A16Z as well. And the thing, we are focusing on a real problem where you just try to create a better incentive mechanism. Kind of sounds like, you know, the entitled founder who was complaining all the money is flowing into meme coins and it's not flowing into my project. All the money is flowing into NFT founders. I'm not delivering on their roadmap.
Yeah, that perspective is the worst, isn't it?
I am solving a real problem, and I just hate, you know, a line of thought like that. Yes, you know, be competitive, criticize your competition, but don't portray yourself as being above everyone else, looking down and be like, I solve a real problem and you do shit, hence I deserve to win the battle.
Yeah, I think that's a great take. I similarly really dislike that perspective. But look, I think we've spoken about that enough. It's an interesting one to watch. I'm actually here for it. I'm here for people not being friends with each other when they're competing with each other, and gonna go at it. Like, look, there's a limit. There's a lot of liquidity on chain, but it's not infinite, and there's so many L2s coming to market. You're gonna have to be way more competitive than you are being right now. And as maybe Sammy said, maybe there'll be some like fragmentation. You want to be on this chain for this, maybe you'll be on something else for that. But the primary use case for all this stuff, as things stand, is financial stuff. So you know, you're going to have to compete. And I don't mind that at all. Shout out to Kashmir in the comments on YouTube saying, just build on ETH, leave all the other chains alone. God damn it. Yeah, that's true. Need that Gwei price to go back up on ETH, show that anyone gives a damn anymore about the mother chain. Look, let's get into the Web3 Roundup to get you up to speed with everything else that's been happening in the space before we hit the final two headlines. Number one, Kamala Harris, according to advisor, will support policies that ensure emerging technologies can continue to grow. I think they stopped short of saying that could be crypto, but you know, some people are interpreting that as crypto, so I thought I'd bring that to people's attention. Number two, Vitalik bull posts Ethereum by sharing an image of a bull with an Ethereum is good sign. Vitalik doing his best to pump all of our bags. Tether announcement, UAE dirham pegged stablecoin. That's pretty cool. It sounds like we're going to have all kinds of stablecoins in the future, right? We've got the euro that's came out recently. We've got the dirham now. Money's going on chain across the board. Next, Doodles announced Zora partnership where you can mint, collect, and trade top performing social shorts. That seems pretty cool and fun. Forbes and Optimism announced 540k prize pool for their Sunny's award show for on-chain builders and creators. That also sounds pretty fun and good for creators all around. Raoul Pal buys 3 more Xcopy known editions for around 20 ETH each. Mentioned that already. And finally, Snowfro mints the final Chromie squiggle directly to the LACMA. If you can see what it looks like on screen on YouTube or on X, it is a chart going up. It's going up. We're up and to the right. That is what the final Chromie squiggle looks like from the famous Chromie squiggle collection by Snowfro. Hopefully that is a bullish sign. We've got 9 minutes left for the show. We've got a couple of headlines just to bring you up to speed on. I think we'll deal with the McDonald's one pretty quickly because, to be honest, I find hack stories pretty boring, but they're important in the sense that it happened and we need to be aware of it. So I'll just take people through that and then we'll spend a bit more time discussing NFTs because we love NFTs more. McDonald's Instagram account seemingly hacked to promote Solana token Grimace. Fast food chain's account seemed to promote a Solana meme coin called Grimace. It shot up to a $20 million market cap before dropping down to 1 million. There was actually a message left on the account, which kind of was pretty proud in its hack of the huge account. So pretty annoying stuff. I don't know what the particular consequences are, but I think a lot of people lost some money yesterday on that. Not good for the space in general. Not good that bigger accounts are getting targeted in this way. Security needs to be increased. And then finally, our final headline for the day is that NFT prices are up across the board. I remember this tweet I wrote, I think it might have been about a month ago, right? Where I said, I like the risk reward. This is just not pumping my own bags, pumping my own opinions here. About a month ago, I wrote this tweet about how I like the risk reward of NFTs at the moment because they are because versus meme coins versus VC coins, there are fewer sellers now. And like all of these coins are coming out. There's a lot of sell pressure. There's a lot of people who are in much earlier than you and at a lower price than you, which means that the sell pressure is higher. Whereas NFTs were kind of just chilling at whatever price they were. Like they couldn't really go much lower necessarily. And I just kind of like the risk reward. I mean, they could still go lower and everything else could go lower too, but I just like the risk reward at the time. I don't know if that's part of the reason why we're seeing this resurgence. Legendary, what's your reflection on why we're seeing this resurgence across the board?
Yeah, multiple things. I just remember the one show where we went on and looked at the top of OpenSea fees and looked at the pump.fun fees, and we just got to a point where it seems like we reached a certain level of hype and peak with pump.fun that's just not sustainable forever. And we spoke at the start of the show a bit about the fragmentation that we've seen, that we have been seeing. Then we had the massive pump in CryptoPunks, where I made the argument CryptoPunks used to be the bellwether for the JPEG season in general. You made the counterpoint saying actually apes did pump before that. I still think that both can be true at the same time. You had apes leading, then you had a punk sweep, and that still gave people additional confidence to see more movement in the JPEG market. And as with so many things that we have been seeing, it's just a cyclical nature, right? I mean, meme coins, as fun as they are, become saturated. Then we have other things like the prediction markets take our attention, and then some of the attention is flowing back into NFTs. I strongly would disagree that this is new money coming in and suddenly buying our old JPEGs. That, in my opinion, is definitely not the case. It's just we're moving money around, and the question is how sustainable that is. Like, it's not the first time over the last 2 years that we've seen a good pump in NFTs. But the reality is, if you extrapolate to the last 2 years, it's been down only, with a few like corrections and green days to celebrate. So I am still not fully convinced that we will see an NFT season. We might see one, and I am pretty certain that we will see nothing that comes close to the craze that we saw in 2021 and 2022.
Okay. I like all that thinking. Quick counterpoint. I don't know if it's a perfect counterpoint, but a quote that I want Sammy to respond to. This is a tweet shared by Cyrus not long ago. I think it was either a day ago or 2 days ago. Just going to zoom in so you can see properly for the people watching in. He said, this was actually in response to a meme coin tweet by Murad, who is, I don't know, one of the meme coin leaders, cult leaders at this point or something. And Cyrus said this: reminds me of the posts where NFT bag holders, when Bake, Doodle, Suzuki, etc., all nuked 50% and then bounced 20% mid 2022. Then they kept doing the nuke 50%, bounce 20% thing over and over for 2 years straight. This was the same point I was making about meme coins the other day when I was saying, look, they just keep making lower highs and then lower lows. It's like we're just going like this, low, slowly going down over time. Sammy, what do you think when it comes to NFTs? Are we still in this loop that Cyrus is describing, which is like nuke 50%, bounce 20, nuke 50, bounce 20? What are your thoughts?
Yeah, I think the whole recycled capital is pretty prevalent. Like, I don't see any indications of new money coming in, and I think we've spoken about this on the show before. And I think it was Cyrus who posted the roller coaster image, and I think that's probably just playing out. Like, I don't see it getting to new all-time highs with existing coins until new capital comes in, and that's even assuming that new capital is interested in those coins. There might be completely new coins that they resonate with more, that has a more universal appeal, that kind of reaches those new highs. And I can't remember who said it, but there is a danger to assuming that some of these mid-market caps, or 500 mil or 100 to 500 mil market cap coins, are going to make that resurgence to new all-time highs. Like, they might just not be relevant in the future. And I think ultimately holding that to the grave could be pretty detrimental to your bag. So yeah, it's hard to play. I'm not deep in those trenches just because I just don't think I have a knack for it. I think that trying to work out what that universal appeals and what the general populace is going to be interested in is very difficult. Like, who would have thought that Doge, SHIB back in 2020 or 2021 was going to hit the masses? And I think like Pepe last year, with this year. So it's just interesting. Like, it's very hard to pick those. So
Question to the both of you. If you head to Polymarket and would search for the term NFT, how many bets do you think come up in total? How many NFT related bets are there currently on Polymarket?
3.
B, your guess?
10.
1.
And is it related to Trump as well? Like Trump's NFT?
Still the Will Milady flip Bored Apes in 2024, which we talked about on the show, which used to be a good bet. 20K in it, obviously now down to a 21% chance of that happening. So if we use prediction markets as indicators for where interest is flowing, it's actually, I was kind of surprised to just see a single bet coming up when you search for the term NFT.
Interesting. That is an interesting data point. I want to think about why that'd be the case, because actually, given that people have been playing all these games, like what words are people going to say? I would have thought that like predicting price on NFTs might have been one of the fun ones. Maybe there's a more technical legal reason why predicting price movements on shorter timeframes maybe is not allowed potentially. I'm not sure.
I do have a thesis that we are in a bit of a bubble. Like, if you look at the people that respond to your posts specifically to NFTs, I think there's probably some overlap with meme coins, but I don't think it's completely like entwined. And I think the NFT bubble is quite small. Like, if you eventually break out of like the crypto Twitter bubble and you look at the stuff that Web2 or traditional people are looking at, there's actually a lot of people out there, but they just don't interact with our stuff. And I think we are in somewhat of a bubble. And I think to break out of that, you have to have that product market fit. And I don't necessarily know what that is yet. Prediction markets could be something, but I just don't know how you'd integrate with NFTs specifically for that without just betting on price or.
Yeah. Interesting stuff. Look, guys, another great show. That is the end of the show for today. Thanks so much for joining us. Remember, we do this live every single day, Monday to Friday, 7 a.m. Eastern time for 1 hour. Everything to do with the NFT market, the crypto market, prediction markets, and how to make some or a lot of money on the internet. Thank you to my legendary co-hosts, Legendary and Sammy. And thank you guys for joining. We'll be back again tomorrow at the same time. Have a great day. We will see you tomorrow. Bye-bye.